Good afternoon, ladies and gentlemen. I would like to welcome all of you to the one before last session of the day, our panel about technology, what's hot and what's not in the FX industry. I will let the panel's moderator, Andrew Ralich, who is our technology expert for Forex Magnets and CEO of the Forex Magnets award-winning company 10, to take it from here and to present this distinguished panel. And I hope you enjoy and learn and have a fruitful day. Thank you.
Thank you, Erez. Welcome, everybody, to the technology panel. First and foremost, on behalf of myself and all of our panelists here, we'd like to thank everybody who's attended the conference and is attending our talk today, and also Conversion Pros and Forex Magnates for putting on another excellent show. We really appreciate it. These are events that I know all of us look forward to throughout the year and are very excited to be part of. Today we're going to be talking about technology, a very broad topic which in an electronic trading space can be covering everything from execution to payments to how you market your company electronically to clients. And Forex Magnates and Conversion Pros have put together a very multifaceted group of providers here. And I'll pass it over to them to let them introduce themselves, and we'll dive right into some questions. So, Rob, why don't you kick it off?
Hi. My name is Rob Fleschler. I run the wholesale business globally at Hotspot FX. Hotspot is a liquidity provider. We run an electronic communications network, an ECN, and basically our objective is to provide liquidity both to institutional clients, retail brokers, and banks.
Hi, my name is Paul Smith. I'm from London. My company is Mobile Trading Partners. I began writing user interfaces for futures and options trading about 25 years ago. Done a few other things since then, but my company now, since 2010, we've been specializing in building mobile primarily and also web UI, and additionally data distribution to support that. So we deliver mobile applications for trading, essentially.
Dacia Hao. I'm Itai Damti, co-founder at Leverate, and I'm managing director for the Asia-Pacific region. Hong Kong is my current home. Leverate, as most of you know, provides turnkey solutions for FX brokers globally, and my goal as the manager in Asia-Pacific is to set and meet the highest standards for our clients in the region. Hong Kong has been my home in the last 6 months, and if any of you is based here, you're welcome to pay us a visit.
Hello, my name is Elbina Zhdanova. I represent Tulsa Brokers company that develops software for MT4 and MT5 platforms. We basically develop, we aimed on custom developments, and for current time we have about maybe 100 developments. And my goal in the company, I'm an executive director, and every decision and every product and launching this product is on my responsibilities. It's an honor for me to take part in this panel with such kind of specialists, and I'm glad to have an opportunity to share experience with each other.
Hello everyone, my name is Maor Lav. I'm the co-founder of Panda Trading System. We are a software company within the industry. For the last 7 years, we provided brokers with all the technology elements they need in order to operate a Forex company and also online binary company. My goal here is also to share the knowledge, but also to find partner within the region. If anyone is interested to partner in the region, I'll be happy to speak with him later.
My name is Yoav. I'm the CEO of UPay. UPay is a payment service provider. We operate out of Singapore. We are part of the user group that got listed in Singapore Stock Exchange 3 months ago. We provide online and mobile payment solutions for the industry as well as to traditional e-commerce.
Good afternoon. My name is Hugh Liang. I run the electronic FX platform division of State Street Bank for Asia Pacific. You guys probably know us better as the Currenex brand. And for those not familiar with Currenex, we essentially started the multi-bank aggregation space in 1999, converted that into a white label platform around 2004 that included user interfaces, aggregation capabilities, rate management, and risk management platforms. And then later on, around 2007, we took the product and added a real-time margining capabilities and made that available to the retail broker-dealer division. Asia Pacific is actually our largest spot for the retail FX industry. So I'm very happy to be here speaking with all of you.
Thank you, everybody. And as I noted, we are blessed with quite a broad range of expertise on the panel today across everybody. And actually, the panelists have asked me to flip it around to the crowd prior to getting started, so we have an idea of who we're speaking to. So if I can ask, how many people in the audience are a broker, a retail or institutional broker? Raise your hands. And who's a service or technology provider specific to the FX space? And any traders in the audience, or? Okay. Excellent, a brave man there. So we're going to kick it off right away with the questions here. Why don't we start down to Hugh? This one's going to be for the whole group. We'll go down the line. Some of the questions will be a little bit more targeted, specific to some of the more niche expertise that we have on the panel here. So Hugh, the demand for retail FX technology in Asia has grown significantly, especially in the last 2 to 3 years. There's been a lot of attention paid to this area. What specifically, and this will be for everybody, what have your organizations done to address this opportunity here? And also, on the flip side, what challenges has this market presented to you that you see opportunities moving forward to address?
I guess the first thing I'd say is it's not really just the last 2 or 3 years that the volume in Asia has really been going up, right? We ourselves been here since 2006, 2007. I think many of the brokers here probably started even earlier. So this started, I think, well in the mid-2000s, right? Particularly with Japan really coming online and information getting out to everybody, knowing that this is the size of the market in Asia Pacific. You know, we made our ground here from the institutional side, and what we were really seeing the need for Asia Pacific was sort of a risk management as well as a regulatory management type of a need. And we've seen that in the last few years and such, with Japan leading the way in the late 2000s, changing their leverage ratios, and with the US changing its leverage ratio, and especially with all the credit and crisis information happening. What we've really seen is that the need for a flexible system is probably the question that we get asked the most. What happened if the leverage ratio changed yet again? What happened if the liquidity sort of dries up a little bit? What do we do with our system? So we try to provide something that is really able to change with that kind of environment. Now, obviously, things like user interfaces, particularly in the retail segment, is hugely important, right? And people are going to come and people are going to go, and you always need something that is that's very attractive to customers. But I think what we really focus on in the last 4, 5, 6 years, and especially in the last 2, 3 years, is really to build a system that as the volume continues to increase in Asia Pacific, that whoever is using our technology can scale, and especially in light of the event like the Swissy crisis, can continue to trade without any interruption. Things like user interfaces and such, we're very happy to either provide our own or work with other partners. I think a lot of the panels here have companies that are having very distinguished and innovative designs, and some of that stuff we much rather partner with these folks.
Thanks, Hugh. You have.
From a payment perspective, part of the changes or the trends that we see in the last 2 years is the moving from fulfilling the payment on the PC to fulfilling the payment from the mobile. If in the past people actually used the application to trade or went to the relevant website to trade, however, when it came to payment, they did not accomplish the payment from within the mobile. They did it from the PC. So this is a trend that, as a payment service provider, we try now to educate the merchants that when they develop the payment page for their platform or on the app, they should consider the fact that the payment will be done from the mobile and not necessarily from the PC. For example, we encourage them to use the responsive web pages, which will render in a smart way when the user approaches the payment page on the mobile. We saw a tremendous change in the conversion when the payment page is well executed on the mobile. And this is a trend that important to take with you if you're a platform provider, as well as if you're a new label.
So I will speak specifically on the Japanese market because this is our expertise. And as a software providers, there are 3 points. One is localization. You really need to work with the client in order to create the GUI and localize the software. 2 is performance. Unlike other markets, the system must have 100% uptime. And lastly, regulation. Every software that we released, we need to work with the regulator to make sure that every small element is according to their regulation and approved with them. I think those are the 3 key elements we see in the region.
Thanks, Mayor.
We more on server part and on custom development because of the Asia especially. Each month we have a request about from 5-10 companies to have something individual. And even, for example, we have bonus program, and even this bonus program, each company from Asia, not only China, also other countries, Indonesia and so on, they want to change logic and add something new, something individual to have exclusive offer to their market. And now this market is going more on the bonus programs. Previously it was agent structures and so on. And it's not only about technology, it's also about how people make the deal. They are very hurry, and I mean in good, in a good sense, of course. And you should make everything in time. So if you say that it will take 1 week, it really should be 1 week, and there is no delays possible.
I want to relate to the perspective of technology companies and refer to some of the points that have been mentioned. From a technology perspective, there are 2 big misconceptions about the Chinese market, relating to China specifically. First one is that there is a lot of money on the floor, and all you need to do as a technology company is to get into China, just launch something in China. So a lot of companies do that and fail. And then the next step would be, okay, so we need to localize stuff, so let's just put everything in Chinese and see if that works. That's a step in the right direction. As Maor has mentioned, the user interface is an important part, but this is not enough. I think that the most important thing we did as a company for this market is me moving here and getting closer to the market. Because if you have the background of a product manager or a technical person or someone who knows the operations in Israel, you have a lot of insights about the market. So I'm going to make 3 points like Maor did, but slightly different. I think the most critical point is technology infrastructure for FX brokers. If you're not accelerated, if you're not hosted in Asia and your critical components are fully functional in Asia, you will fail. You will fall on your face badly. Second point is when it comes to service, I think that us as a company, we took a decision to create a strong team in Asia, and it's actually for the brokers themselves as well. So a lot of brokers realize that serving the Chinese market demands a lot more operations people, customer service people. It's a really, really intimate relationship between you and the clients, and I'm happy that we're doing it successfully. The third layer of expansion into the East, I would say, is in the product area. I know that there are a lot of local social networks like WeChat and QQ in the past, and things are changing very fast for China. Also, the IBs are kings in the Chinese market, and if you're a broker that doesn't provide full transparency to IBs via your software, you will not succeed in the China market. Social trading, mobile trading, these are all very, very important things. So product adapting is also very important.
Thanks, Itai. Paul, and let's touch on some challenges as well, too. I think everybody has some good opinions of what products are attractive out here, and a lot of them seem to cascade from things we've seen in other markets that have evolved. But specifically to this area, some challenges you've seen.
So yes, to us, the growth in Asia is not a surprise. I mean, even without working with brokers who weren't specifically addressing this market, we were seeing 40% of the transactions through our network addressing, well, they were going to China. They were coming from China a year ago. As far as our own focus, we've hired staff who speak, they are natives, they're from this area, they're helping with the development. But as you say, the key question for me is making the service really work in this region. And the challenges aren't just simply infrastructure reliability. Yes, we have to have servers inside China. Okay, we've done that. How do we communicate with the back end in some other countries? We have to make that work point to point and be reliable within China. The other big focus that we're finding is on security, because in an attack which one might detect on one's network, which is rare in Europe, is frequent in this region. And we have to be aware that the reality is that we can't trust the network. Well, we never can anyway. The internet isn't something that you can trust. The internet is something that you develop around the shortcomings of to make a reliable solution for the client. But in this region, it's not quite like being in a war zone, but it sometimes feels like it. We have to be very super aware that the quality of the end product depends on, are the transactions that the user thinks they're going to do really the transactions they're going to get? Are their credentials safe? All of those matters, they matter more here possibly. Certainly we're very focused on that.
Very good. Rob?
So I'm going to talk about liquidity. So Hotspot FX is a liquidity provider. And our company has been around for about 15 years. And 3 years ago, we took a decision to enter into a new space, which is the wholesale space. Well, and primarily catering to retail brokers, but also to smaller asset managers, but mostly retail brokers. And some of the challenges that we faced was we came from the institutional side, so dealing with big IT departments and things like that, a lot of the challenges that we had getting up and running, they were standard. In other words, one bank's issue was very similar to another bank's issue. One of the challenges that we faced and had to overcome in Asia specifically is that from a retail brokerage point of view, almost every issue that a retail broker has, they almost never are exactly the same. So everybody always has a different or a slightly different issue. So we overcame those issues by working very closely with certain markets. We started out in the Japanese market about 3 years ago, and although we were, I wouldn't say late to the party, but certainly within the last 3 years, people were there before us. It showed that if we are dedicated to providing customized solutions and specific data feeds and execution streams, that we could still get into that marketplace. And so now we're trying to expand our business into precious metals. And once again, we're not the biggest precious metals trading house. However, we do have pretty decent liquidity. And one of the challenges that we're trying to overcome for the Chinese market is that the traders have a tendency to like to trade large size and sweep books. So we're trying to come up with a solution which we call large streaming feed, and so that people don't actually just have to sweep across different venues, which has a tendency to upset liquidity providers from time to time. So we're just actually asking people to make a request for the size that they would like to stream, and then we will price specifically to that amount, and you get a single ticket.
So it sounds like some common themes that across everybody's different touch into the Asia-Pacific market. Localization. I know from my own perspective with the technology background that localization is a significant challenge, and especially where a lot of these technologies were relying on the fact that you could get away with English in a lot of the world, and all of a sudden you entered some new markets where being able to communicate in the local language, which has a character format and a layout that is challenging, can be quite difficult.
I've actually got a point to that.
Sure.
I've actually got a point to that. In my view, localization isn't the answer at all. The product has to be native. So in other words, to make something really work in the Asian market, we have to build product which is really coming from the needs of the users in this market, because it's different. It's not the same. Mobile is a generation ahead here. People are using mobile first. In Europe, it's kind of they use it, but they don't really care. Here it really matters. It's different.
So your point brings up an interesting, going back to ITES as well, an interesting dichotomy. So on one end, you pointed out a challenge that there's a lot of, I can start it up quickly, I'm going to make it, redo it model, where we're not providing solutions that we traditionally would provide in the past. And the impetus or the implication there is that we have proven solutions, we can do that better, or we've done it before. But at the same time, you're saying that our lack of experience with the infrastructure necessitates that we use that onshore experience. And so be it a user interface or a liquidity pool, it's customized to here. So Hugh, why don't we transition to liquidity a bit? Talk about, or what customized things have you done and worked with brokers here that has presented specific
Right, so let me talk about this localization a little bit, right? Because localization is not just the language of the GUI. Localization is just not whether you're reading from the right side of the screen or the left side of the screen. It does cover the liquidity that you talked about. It covers the help desk support people that are, whether they are local or not, and it talks about even the infrastructure itself, whether that's local or not. I think we're all pretty much service providers in some way, right? Some of these guys are retail brokers. I'm a technology provider to the other retail brokers. There are some scalabilities you have to have, right? If everything is 100% customized, then you as a broker would develop everything on your own. There's no point of having service providers out there. So we, as a service provider, will use some of our expertise and some of our scale to bring down the cost. Therefore, we got to find a middle ground here. So I think while it might be ideal for someone to have a brand image to build everything on their own, at some point you do have to work with someone, right? So what's important is choosing someone that has a system that was really built from the ground up to be scalable, to be customizable. Now, if you need something very specific, then perhaps you go to a consulting company and get some totally on your own. Now, back to your liquidity. I think liquidity is a very interesting one. And I remember sitting on one of these panels a couple of years ago, CEO of another technology provider says, well, the more, the better. If I have 10 banks, I can throw another 5. That's even better. If I can have 100 banks, that'd be great. I think that has completely changed these days, right? It's not about the amount of liquidity or the sources of liquidity. It's about the quality of liquidity. So I think this is also goes to the point that was just mentioned about the large sizes, right? So we had a product that's been out for a couple of years. It's called Big. Very similar. The concept is like a large one. So you can either sweep a book, or people are, I think, really finding out these days the quality really matters, right? So if I can get a single size that meets the bank provider's limits and such, that might be a better bid than sweeping across the book. So we have to really tailor that quite a bit between the institutional side as well as the retail side. And the retail side brokers, as you can probably imagine too, some of these new upstart brokers in China might have a few hundred, few thousand clients that are doing, who knows, a couple of $100 million a day. Then you have the guys in Japan who are doing tens, if not more, yards a day. So that liquidity need is going to be very different. And also for some of the providers that provide social networks, right? You got one guy trading 5,000, 10,000, but you got 4,000 people generating that signal. That's a very different dynamics of pricing when you throw it into one. So we really done a lot of work in terms of meeting the regulatory requirements, as I said already, but really bringing on the liquidity and moving on the physical infrastructure. So we can maybe touch on that a little bit later, but certainly we have the physical distance to worry about when banks are pricing in New York or banks are pricing out of London. When people are in China or Tokyo or Singapore, it'll be faster if the system is actually all located here. And the great news, I think, today is that all the global banks, either the true market-making banks or either also some of these non-banks who are capable of providing liquidity, all have infrastructure locally in Asia. So we put that infrastructure in about 2 years ago that went live last year, where we can really source directly from the Tokyo area and provide it to not just Japan, but all of our clients in the local region.
So Hugh, very quickly, is the reason for putting that infrastructure here solely latency related for these providers, or do you think they provide different liquidity here? And just briefly touch on that, please.
I think, to me, it's kind of 3 things, right? One is the very, very obvious, which is taking out the latency. So you got about 200 milliseconds of round-trip latency from Tokyo to New York, and that theoretically would disappear, right? Number 2, it is the uniqueness of the liquidity, right? When a large market-making bank, when they have a desk that can hedge off on EBS or whoever else in the local hour during the local currencies, like a yen, you are going to get something a little bit different than what you get out of the desks in New York and London. And I think the third thing is just, it's just comfort level, right? Reliability and comfort level to the clients. And to us, I think it's a point of differentiation when we talk about localization. So we got screens that can be localized to the language. We got liquidity that can be localized from Asia, and we have people that you can answer the phone locally. So that all rounds out that localization package.
Great. And just to finalize the liquidity conversation, Ite, from the institutional perspective, we heard from both Rob and Hugh that large ticket sizes is actually something that a challenge in sweeping and how to take these institutional volumes and clear them. A lot in bullion coming out of the Hong Kong area. You touch a lot of brokers with leverage service. Though you're not a liquidity provider, you do custom tailor and work with brokers on liquidity solutions. Is it large tickets that you're seeing coming through the retail venues, or what specifically do you see unique about the trading behaviors here?
I think that China has different trading behavior than other places, and it's very challenging for brokers to absorb this flow. A lot of them choose to do STP upfront, just as a business decision. We see a lot of that in that region. Also, EAs are the source of MT4. Expert advisors are the source of much of the volume that we see coming at one time. And maybe I can talk about what happened with the SNB announcement. We saw huge volumes coming to our systems as a result of the announcement, and it came in two waves. First wave was due to the sudden drop in the price. A lot of stop losses and automated trading and EAs just got crazy over those moments. And the second wave, which came about 3 or 4 seconds afterwards, was a manual wave, where people just traded manually to close positions. And I'm sure many of the brokers here have seen similar behaviors. Of course, there is no difference between a big ticket size and a lot of orders coming at the same time together. All we can do is look at all of our liquidity providers that we connect brokers to and try to optimize the choice of liquidity provider according to the character of the broker. This is what we do as a company that serves retail brokerages.
Thank you. And Paul, very quick follow-up, please.
Addressing this question about the different ticket sizes, one of our customers, we built for them both an app and a web widget which allows the end users to price according to the ticket size. So it'll do exactly what you were talking about, but in real time.
Thank you. So often on these panels, there tends to be an apprehension to bring up the 800-pound gorilla, but I want to talk about MetaTrader because I think in the retail space, in the technology sector, its ubiquity is undeniable. Its platform dominance is undeniable, and we have a lot of expertise touching that platform from many different venues, even the institutional space. I'm going to go down to Albina first, and can you tell me what is making MT4 attractive in Asia, as we know it is in the rest of the world, and what specifically are you doing to augment the platform for these brokers here?
I think the main advantage is the expert advisors that they can use, because they can build everything they want and it will help them to trade, and also signals that provide copy tools, copying the trades from investors, copying the trade by investors from money managers. So the main advantage, as I think, for retail is the expert advisors, and for brokerage companies, because it's more maybe I can't say that this is the best platform, but there is a lot of solutions and developments, and all the liquidity works with MT4, so it's easy to make something new, and it's easy to use it and attract new clients.
Great, thank you. What I'm going to do here, I'm going to ping back and forth from an MT4 specific. We'll go to an institutional perspective, and then we'll go back to Mayor after to talk a little bit more specifically about the platform. So Rob, where do you guys see MT4?
Well, so when we got into the wholesale business, we realized that, number one, we really didn't want to have to build our own bridge and our own technology, maintain it, and engage with every client end user. So what we did, the first thing we did was connect to all the bridges. So we're connected to, pretty much the 3 or 4 major bridges, and then a couple of more localized bridge providers. And so our emphasis has always been to just continue to manage the liquidity side of it, but we realize that we need to partner with a lot of other people to provide, not just MetaTrader, by the way, it could be other front-end platforms or other back-end solutions. So from our perspective is we're agnostic to the vendors that are providing the MetaTrader 4 or 5 solutions. But once again, we have to cater to the end user's feed requirement. So there's no need to send $10 million feed down a pipe to a MetaTrader when most of the the trades are anywhere from $1,000 to a couple $100,000.
Quick follow-up. You obviously in the institutional space are going to interface with banks a lot, and it's somewhat surprising. And I think if you went back 8 years and asked if the quant desk at Morgan Stanley and Goldman Sachs are going to know what an EA is, you'd probably say no. That's kind of way below their pay grade, and they do. Would you say that a bank or an STP liquidity provider sees MetaTrader Flow in the Asian market the same as MetaTrader Flow in the rest of the world, given it's a globally distributed platform, or do you think there's different MetaTrader behaviors coming out of Asia that have specific characteristics?
You know, in some ways, it's just known as MetaTrader Flow globally, but certainly some of the business from certain parts of the world seems to be sharper than from other parts of the world. So when you're at a trading desk at a bank or at a non-bank market maker, you're always trying to assess whether the flow is profitable or not, and then adjust the feed that you're providing to a Hotspot or to a CurrentX or somebody else in order to maintain a certain level of profitability and certainly try not to lose money. So, you know, it seems that a lot of the flow, like for example, I was mentioning the Japanese flow, a lot of people seem to like that flow. Now what's interesting about that is it's not necessarily MetaTrader flow. It's not a really popular product onshore, but it's a retail-based flow. And the perception is that retail-based flow is softer than, you know, let's say flow from a hedge fund or from a high-frequency trading fund. So from a MetaTrader point of view, I do think that people categorize it as, oh, here's some MetaTrader flow, but they're very, very interested in the part of the world that it comes from. So they do distinguish between regions.
An interesting transition, Mayor. You I know, provide services for the MetaTrader platform, and you also mentioned you do a lot of work in Japan. So can you talk specifically to what you're seeing in that region?
Definitely. Before that, anyone here is from MetaQuartz? Okay, so we can speak freely. It's no secret that my business mainly is around MetaQuartz. We work with them end by end, but at the end of the day, we see MetaQuartz, the MetaTrader, as an engine, excellent engine, but still the broker needs to host the solution, and it's like an engine of a good car, but he still needs to build his own car in order to operate. For the last 4 years, we partnered with FX Trade Financial, one of the Japanese brokers, and we manage all of the MT4 related infrastructures. Of course, you need to adapt the MT4 in order to be a regulated platform in Japan. There's a lot of tweaks that need to be made. But I think the main challenge on the MetaTrader is that today on the Japanese market, at least for the retail trader, he is able to get 0.3, 0.4 on the dollar-yen on the regular platform. But on the MT4, it's around 0.9 or even 1 pips. So because of that, it's less attractive for the end user to trade on the MT4. I think the brokers today, the Japanese brokers, are a bit hesitated to take scalpers. And one of the main issues with the MT4 that it's very easy to program a software that can scalp the market directly. We see a challenge from a liquidity point of view that the brokers are offering 0.3 on the dollar-yen, and they don't have anywhere to hedge the risk, because if they hedge the risk, they don't make any money. And I think one of the main challenges for the liquidity is to find a good liquidity partners that can still be very aggressive on the liquidity. From an MT4 perspective, we see the spread getting lower, and I believe that once the spread will be equal to the proprietary trading systems, then the MT4, it's like a disease. It's a good disease, but it's like a disease, and the Japanese and the Asian market will definitely be part of the game. In China, we also saw companies that use the MT4 server that is not licensed by MetaQuartz. They just hack the software, open a company with their own server. That's a specific phenomenon for China.
Would you say that that falls under the bucket of some of the security and infrastructure challenges that Paul was mentioning previously? And Itay, you look like you're itching to respond to that one.
I actually agree with Albina about why MT4 is so successful globally. But I think that China has its own reasons. There are two funnier reasons that MT4 is successful in China. Why is Windows so successful in China? Because it was easy to hack 7 years ago. So MT4 as a server got successful in China because people are able to get it for dirt cheap. It's just a very, very cheap commodity when you talk about hacked servers. This is from the broker side. From the trader side, there is another funny reason why MT4 is successful, that the system requirements for this app are nothing. So we have a lot of advanced trading solutions for the web that people in China are just not able to access. If you look at the Bank of China website, it only supports Internet Explorer 8. this is the most advanced version of Internet Explorer it supports. So there are technology difficulties in China that really made MT4 successful. And I want to relate to Maor's point that service has really become a whole ecosystem around MT4. Not only the technology, I mean, we built a whole business around the MT4 ecosystem. We developed all of our products around the same core engine in the beginning. And then we found that the biggest challenge that brokers see is in the service and operations part. So the part of the company that we scaled the most aggressively in the last few years is actually the configuration, the monitoring, the ongoing support, and operations.
Yeah, very good. And so I do want to step away from MetaTrader, and again, I think it's a disservice not to talk about that platform because of its popularity, but in any conversation about MetaTrader, the follow-up is always what's next. And so in 2014, in these panels or these conversations, social trading was a major trend. And you know, it's a trend that made its way into the Asia-Pacific market. I'm sure we're seeing it here as well. Your perspective, Paul, on social trading and how that's having effects in yes. possibly being the next thing.
Yes, we were first pushing social trading 5 years ago, and maybe it was a little bit too early then. I see it's really happening, but Asia definitely is stronger. For us, I think is okay, my model of an effective social community is a social community that crosses some boundaries. So in other words, if you just have one broker and maybe they have like a few thousand or tens of thousand customers, if that is the only community that they're dealing in, that may not be enough to have a viable social community. So something that crosses borders really works. Our very first product, we were pushing it out across Twitter, and that worked very well. It just there weren't very many people using it at that time. In Asia, with the very effective social networks, I think we have a viable platform for social delivery, and I'm certainly seeing much more interest here than I ever see in Europe for it.
I'll jump in on social a little bit. It might be interesting for a guy from the bank side to talk about the social trading, and it was very scary for our bank to understand that we were working with some of these partners that was doing social trading. But it is a new trend, right? So we all got to be up on the trend. But I think the judgment is still out on whether social trading is ultimately going to be successful or not, right? From a wider social point of view, it's certainly everybody's using Facebook, everybody's using Twitter. And aside from liquidity, infrastructure, all of these challenges that we have in the social trading space, the biggest one, I think, is there is no conclusive proof whether social trading gets you better P&L than if some guy just slammed on the buys and sells all the time. Right, and again, I think it was 1 or 2 years ago when we were on one of these panels. I'm not going to say who it is, but it's one of the CEOs of a social company. He says, social trading absolutely makes money for you. And I would challenge anybody to find some statistic, hard data that says in a short or even medium term that you are going to do that. But perhaps we just don't have that, right? And so there's a lot of things that we need to do to make it successful. And I think the liquidity, going back to liquidity thing, liquidity itself it's a big challenge, right? In Japan, we were mentioning that the MetaTrader system is 0.9 and everything else is 0.3. I think all of us as technology providers, as service providers, and as brokers should have a long-term goal of winding that spread, right? This is just absolutely not sustainable when clients are trading on 0.3 and the interbank is 0.9. And the next time we have an issue like the Swissy happening in the yen, we're probably going to see half of the retail world going down. And going back to the social side, so in order to get social to, I think, be truly successful, we have to solve a lot of the problems underlying social as opposed to try to really, really drive the demand of social, right? One of the big problem with the social right now is you have huge amounts of slippage, right? Depending on who's your back-end service provider. If you have the first guy executing a trade and the 3,999 and the 4,000 guy executing the trade, you know the guy on Goldman's side has already widened his spread when he's pricing all of this stuff. So you're going to get a lot of slippage and you're going to get a lot of tracking error based on some kind of benchmark and you're doing this. So I think we all as a group needs to, one, I think help sustain the product, the whole entire industry by getting that balance of pricing, and two, providing some long-term historical benefit analysis so that customers can realize that there is a benefit to this. And I believe there is. I mean, I absolutely believe in the concept of collective intelligence and that all of us working together somehow can find a better solution. But there are, I think, quite a bit of immediate short-term challenges that we got to come through.
I think the value in social trading is not necessarily the P&L and the profitability. I think that Facebook has not made my life better, but I use it every day. So
it doesn't cost you money, but it doesn't cost you money to use Facebook. It costs you money to trade.
I think the interaction is what people really value, and the ideas, and just looking at others. It's very much a human nature, and I think a lot of very big social networks are successful for that reason.
Let's step back from the validity of social trading. On a technology panel, I'm sure there'll be a social trading panel in Cyprus or somewhere, and we can participate in that. From a technology perspective, quick answer, is there a solution? Hugh, you kind of implied. Is there a solution to liquidity for social trading that's a technology-driven solution? Rob?
2 seconds. I think there absolutely is. You know, the guys at the banks, like the Goldmans, the Morgan Stanley, all of these guys, they knew about MetaTrader a long time ago when Fat Turbo first came out, right? That's a big one. And right now, everybody understands this whole concept of social trading. Now, the dynamics is very different, right? You have a lot of herd mentality in retail in general, and you just get that magnified in a social trading environment. So I think, certainly for us, as a technology provider, we're working with a lot of banks to really look at the type of flow and how can you, for example, again, this goes back to the big conversation, right? You got one person doing 10,000, 5,000 people, totally different liquidity dynamic. But you can work with the banks to price that in bulk, right? And then break up through allocations. So I think some of the technology, people are pushing the front end in some ways, I think a lot more faster than the service provider like all of us and the banks are able to accept. And once that catches up, I think in the long run, we still got to prove the value, but I think it will be there.
Thanks.
So I think the issue, maybe just drill down a little bit on the liquidity provision side. And so the point that was brought up is, you know, the slippage between the first person and the 4,000th person. And the reason that happens is because from a liquidity point of view, all day, if you're pricing at a certain service level, let's say it's $10 million or something like that, and then, you know, one of the social networks gives a signal, and all of a sudden now someone's trying to buy $500 million at the same time. So what we're trying to do and address this are two things. One, throw some technology at the problem and hopefully you know, dice and slice the orders very quickly in a way that we certainly can have a more even execution. And secondly, a lot of it is also expectation management on the client side. So when people are trading as part of a larger group, a lot of it is just education as well. And so I think this concept that everybody gets the same fill at the same price, sure, that's an interesting objective. But really, you know, maybe the better answer is on some type of a social trading network is to poll the pricing and then pass along a fill that's the same for the whole group, but not necessarily the same as it would have been had you been the first person or the last person. It's basically a distributed average.
And just I'd add that, in my view, there's a bit of a conflation of language going on here. Social trading doesn't just mean copy trading, because you can pay for that. You know, there's services where you can, or buy an agent that'll do it for you. Social trading is hard signals and soft signals. The soft signal could be, we want to go in this direction. The soft signal could be, this is a really good brokerage, they give good customer service, stick with it. That's all part of this social mix. It's an important part of the marketing mix for the broker, whether or not it relates to a trade.
So I think to summarize, from liquidity through MetaTrader to social, we're hearing that social has a big pickup in this region specifically. Liquidity needs to be customized to meet social, and thus there is work being done from a technology perspective that brokers, service providers, and liquidity providers should be looking out for and working onshore with people to address. And we've done a good job of touching on some of the infrastructure challenges, some of the trade flow type challenges. Yoav, one of my big challenges here, and I know brokers as well, is moving payments around, and this is your expertise. And I'm actually going to broaden this out to service providers as well. Getting paid by my clients in and out of China, or in and out of the Asia Pacific region can be a challenge, and it is for brokers as well. So can you touch on that a bit, please?
Absolutely, and before that I will touch about the social aspect. We see from a payment perspective the booming of the blog shops, and the blog shops, it's eventually a social e-commerce, and we see the same trend also in the Forex industry, which people like to copy or like to see what others are doing and do the same. So from the payment perspective, we can see the similarities and trends that go across the e-commerce as well as the Forex industry. Now, regarding moving the funds, we see another trend following what you mentioned. More and more Forex brokers require other payment solutions rather than credit cards in order to overcome the challenging of payment, of moving funds from here to there. The growing demands for alternative payments actually also relies on the growing usage of online banking and mobile banking in third world countries, not only the advanced countries. If in the past, for example, wiring funds was a complicated thing, someone had to go physically to the bank and deposit funds. Now, almost all countries along and across Asia have the mobile and online banking. You can do the wiring from the benefits of your chair or your sofa. So this is a certain interesting trend on how funds are moving in Asia as well as the payment to the platforms.
So where is there room to grow? What can be improved about it? Where can we be innovating in order to make that process cleaner for brokers here as well as external providers to be able to confidently work in this area?
If in the past the focus was, from our perspective, is only what kind of credit card solution can you provide, now people come to us and the question is, what alternative payment solutions can you provide? And this is, I think, something that every platform or every broker should take under consideration, that the alternative payment do not scare the end user as they did in the past. In the past, really to wire the funds, maybe can I use credit card? Now it's become more and more a natural habit, those new ways of payment in this industry.
Do you accept Bitcoin, Jay?
Bitcoin is very interesting. One of the problems in Bitcoin is that there's still a big fear in the industry related to Bitcoin. The end users, although it's a big, I would say, a big trend, people look at it. However, when it comes to actual payment, still people fear. It's more like, I would say, it's not a common understanding that when I pay in Bitcoins, or when I will get paid by Bitcoins, there will be enough demand for someone else that I can use the Bitcoin further on. So this is why Bitcoins still people a little bit afraid from using it.
I just bought some Bitcoins down in Wanchai. 2 Bitcoins now.
Do you have them in your pocket?
It's on my phone.
I think the concept of money is that money, the power of money is if I have money, for example, I have US dollars, I always know that someone else will want my money. So I have the notion that it will have a certain value because everyone else wants it. The problem with Bitcoin is when you buy Bitcoins, you always have the fear, can I resell it? Can I really convert it in a reasonable manner to other goods or services or other currency that I can use? And this is actually what distinguishes money that you know that everyone wants to the new Bitcoins or new cryptographic coins that there's still this fear.
Right. But what do you think of the concept of using cryptocurrency as a transport layer for payment systems as opposed to actually doing FX? I mean, we're all in the FX world here, but I mean, one of the biggest fear as an institution in our mind is that the traditional way of doing bid offers across currency is going to disappear and everybody's going to be sticking on the currency rail, on the crypto rail.
I believe, in my personal opinion, that Bitcoin will boom when there will be a big body that will take responsibility on the Bitcoin value. And I'll give you an example. This entity should not necessarily be a regulator. I'll give you an example. Today, we trust companies which are not regulated with our most valuable things. For example, we trust Google with Gmail that they will protect our most valuable information. We trust Facebook that they will protect our information. People can say, oh, we're not so sure, but we all know that they will do their best to protect it. Today in Bitcoins, there is no body that, although they not necessarily need to be regulated, Google is not regulated or Facebook is not regulated, but there is no body who will actually, you can call and say, hey, what's going on with my Bitcoins? Or why the volatility of the Bitcoin is so high? When there will be such a body that you can pick up the phone and call, or that you will know that you will protect the value of the Bitcoins, I think this is the moment where Bitcoin will boom.
I think this will never happen because it's against the idea of Bitcoin. And I think what we see in the Bitcoin space is actually a lot of self-regulation. There is an organization in the US called DATA. It's a self-regulation body from the Bitcoin community led by industry experts. And I think this is the way to go. I totally agree that we trust big companies with our most valuable assets, and we have to accept that it's the future for Bitcoin as well. And currency is political. So as long as there are politics in the world, there will not be one currency that serves everyone, just like language. It's even more difficult than language. It's really, really political. So I believe Bitcoin is the future. I don't know if specifically Bitcoin. I believe cryptocurrency is the future, but it's not yet happened.
Quick comment closing point for Bitcoin.
Okay, quick comment. Let's take it to our field. Binary option, one of the new trends in the industry. Bitcoin is traded 24/7. We see traders coming to the platform on Friday, Saturday, and Sunday and trading Bitcoin. And we also recently launched a broker that you don't need to register. You don't need to open an account. For each position, you send the Bitcoin. If the position is profitable, you're getting the Bitcoin back. The broker actually don't know the client. For me, it was a bit amazing at the beginning.
We don't need Bitcoins, really. I mean, I think cryptocurrencies will be very interesting longer term, but isn't real life more interesting? I mean, you know, we've got the SNB 2 weeks ago. We've got maybe Greece having some issues in Europe. I mean, you know, we don't need to speculate on Bitcoins.
Yeah, but if we had the Bitcoin, we wouldn't have an SNB changing that currency and rules, right? It'll be hitting on its own.
I think on a previous Bitcoin panel, it would be said that any currency or any industry that has an instrument or a currency that would move 20% in one day is pretty illegitimate. I don't know if it's actually gonna pick up. So I think it creates some interesting conversations for sure. From a technology perspective, Yoav, it doesn't sound like it necessarily is the end solution for challenges. If I'm a broker in the audience, and am I necessarily walking out of here to go buy Bitcoin so I can produce better technology or interface with my clients better? Not yet, and it sounds like that's an area of opportunity. So we've got about 8 minutes left, guys. I want to go down the line. It needs to be technology specific, please. What is a major trend in 2015? If you were sitting up here next year and wanted to say I was right, what is a technology-based trend, hotspot or otherwise, that you see coming in the next year?
I think the most relevant one is something that we've already touched on here in the panel, which is that your matching engines are in closer proximity to where your client base is trading from. So, you know, we're investing in the process of you know, certainly becoming more local from a matching point of view. That's the direction I think that the industry is going. And you know, a price for dollar-yen in Asian time zone that's priced in the Asian time zone versus dollar-yen priced outside of New York or priced in New York. You know, a lot of people still take their market data from the New York time zone and then make a price in the Asian time zone. So it's the way, the trend is definitely going out that way, where, you know, people will have localized technology stacks. Many already do.
So quick follow-up, is there an infrastructure improvement that has to happen in order for matching engines to be relevant and accessible here to brokers, or is it just a matter of getting the technology here? Is there something that's going to be a catalyst to that?
Well, I mean, Equinix is already a global brand and product, and so a lot of people use them to house their hardware stacks, but it's really, the real issue from a liquidity point of view is actually getting the liquidity providers, both bank and non-bank, to make prices in the time zone. So, you know, where you have, you know, a couple hundred liquidity providers, let's say in the New York time zone, you know, might only have, you probably at this point have 10 liquidity providers who are actually based in the Asian time zone making prices in Asia.
So 1 vote for localization of liquidity management. Paul?
Yes, I vote completely for that. But that's one of the key factors in the next year, is to see everything actually working here. Of course, the transnational, the cross-border problem, which is partly political in my view, still exists. You know, the interference with the internet connection globally when you're inside China is not an easy one to solve, but it has to be solved. But for me, the other trend that's very, very big, and again, looking at the difference between Europe and Asia, whereas in the past we might have looked at people predominantly using a desktop platform for their retail trading and using the mobile just to have a look and just sort of catch up and maybe dipping in and out, maybe occasionally closing a trade. Well, the difference in the next year is we will see people who don't, it's not just primarily mobile, they're only trading on mobile. They open their account on mobile, they do all their account management on mobile, everything, the entire life cycle of the account is mobile. There is no desktop.
So Paul's vote is that MetaTrader is killed by a non-desktop platform that is completely mobile-based and catered to the Asian market.
Yeah, I think MetaTrader may still is going to. I mean, MetaTrader is not going to go away, not with that sort of a market penetration. But certainly, the way that users interact with their trading experience is becoming mobile first. The account management is one of the key parts of that.
Great, Itai.
I agree with Paul. I think we haven't yet seen the WeChat of brokers. Mobile-first brokers will be more successful in the next coming year. STP-wise, I expect that less brokers will do STP over the next few months in the very short term, because there is a madness around the STP at the moment with all the recent events. But in the long term, traders have more ways to share successful strategies and complex strategies these days, so brokers will have to adopt a sustainable business model and do more STP, so we'll see that coming more.
Business model you touched on, technology. Does that mean if STP is going to be less relevant, the bridge providers need to be transitioning to risk management tools, and what does that actually mean for this market? What from a technology perspective is going to drive that?
Technology needs to think long term, and I think that in the long term it's going more towards STP. I just talked about these next coming months that are going to be a little bit cloudy when it comes to STP. Okay. Last thing, I think there is a huge gap between CRMs in Asia and CRMs in the rest of the world. Western companies are very, very sophisticated with business intelligence and with customer relationship management, so there is a big gap to close, and LXCRM, our CRM product, really tries to close the gap and bring it to the Chinese companies.
Albina.
I see 2 points. The first one is social trading. Now it's limited by one company, and a lot of traders want to copy trades from one brokerage to the other. Maybe we will have some movements in this side. And the second one is binary options. But it should be more integrated with MT4, because for Asian market it's difficult to have two platforms. They already have a lot of clients on MT4, and if they have the separate platform for binary, they need to have to attract new clients. And if it will be integrated totally with MT4, it will be fine.
So, Albina, a prediction for an integrated cross-asset platform that touches into binaries. I think that's very interesting. Mayor?
I think that China, when we think about China, we think a lot of people that can buy our services. And I think the main part, and for this year, we'll see a lot of keep it simple, stupid. And from a technology point of view, I think we'll see a lot of simple GUIs, simple trading application, 2 buttons, buy, sell, very, very simple. And I think part of the localization is really to create simple interfaces also on the mobile for the Chinese, the Japanese market.
Yoav, speaking over the other announcement, make sure you yell.
Since it's a technology panel, I think I would like to mention the small revolution that is about to take place this year. Apple is going to release Apple Watch on April. It means that we believe, part of the hats that I wear, I'm a mentor in the Singapore Management University, so we try to investigate from academic and practical usages big trends. We believe that this will start the era of wearable devices, which means the last time that any one of you actually moved without his phone, probably you can't remember this day that it happens, so why not having the phone on you? Now, why I mention this and what is relevant to this panel, I believe from payment perspective, also from technology perspective, at this distinguished panel, people need to start looking how to implement their technology on wearable devices, from getting signals, doing basic trades, and eventually maybe payment from Apple Watch, which we believe will start in the revolution of wearable devices, and probably many other will come, Android-based or whatever. We don't know exactly, but the revolution, we believe, will start this year.
Excellent. I think the wearable is a very interesting perspective, and I like that. I hope to be trading for my watch at this time next year, and I hope you're right. I'm going to round it off.
Yeah, I'm going to throw in a quick quote what Rob said about local infrastructure. It's something that we've already started a few years ago. Good number of banks, good number of non-bank providers, and I think the pickup will continue to happen on that. But I think the biggest focus, especially given what we saw the last few weeks in the next year or so, probably should be on risk management. A lot of the brokers want to reach out as many clients as possible, make the spreads as tight as possible. But if we all want to be here 5, 10 years from now, having these kind of conferences, we got to balance out the rates, and we have to have the right risk management to manage decline trading and the hedging on the bank side. Whether that is total STP, 100% agency model, I don't know. But certainly the technology and the system has to be in place for the brokers to make that right choice. And the system in the back end for you to hedge that out correctly. So I think there's going to be a renewed concentration on that kind of topic.
Excellent. Well, I think that wraps it up. Erez, thanks everybody for your patience and participation here. And thank you to all the panelists as well. Very interesting.
Thank you, Andrew.
Thank you.
Social Bitcoin trading from your iPhone panel next year. We'll see you there.
Thank you indeed, Andrew, and for the distinguished panelists. This was a very diverse panel indeed. Personally, I can say that I learned a lot. We will have, in 30 minutes, we will have the last session of the day. It will be a keynote speech about localization, a topic that we touched in this panel as well. I hope to see you here. Thank you.